Hey everyone, welcome back to Chasing Returns. This is episode 3. I'm your host JJ,
And I'm Zach.
and we're going to jump straight into it. A lot of news today. Earnings season has started, and Zach, I think you want to talk about one of my favorite companies that I know you haven't been the biggest fan of, but I'll kick it over to you.
Yeah, I'm just going to walk through Tesla's Q1 earnings release. Some notes I have on that. And I wouldn't say I'm not a fan of the company. I am a fan of the company, what they're doing. I'm a big fan of Elon. I just was concerned about valuation in the past, and still am to an extent. But so, to be honest, I was blown away by this earnings report. They're firing on all cylinders, and the first evidence of that is with their gross profit, gross margin. So as you see, their revenue increased 81% year over year, Q1 22 versus Q1 21, but their gross profit was up by 150%. And this is because of their gross margin expansion. So you have this company that is having exponential revenue growth, and on top of that, you're getting gross profit or gross margin expansion. So the combination of those two factors creates just explosive growth in their gross profit. The next thing that stood out to me was this chart of their market share. It breaks it down by region. And as you can see, in the US, they're at a 2.5% market share. So, which was surprising. I would have guessed a lot higher than that. And it tells me there probably is a lot of growth runway there, even with all these new companies entering the EV space. It does seem like Tesla has a huge head start, and I can see them taking a lot more market share.
I was going to say I've got a really good or a strong belief on that front, but we'll address that after this.
Okay. And then this chart right here really opened my eyes. This is operating margin over the last 12 months, or trailing 12 months. And it compared Tesla to all the other major automakers. And as you can see, they went from negative to all of a sudden they have the highest operating margin of any major automaker. And what's really crazy about this is that they don't have the scale that these other, like they're already the highest operating margin with way less scale than like a Toyota, a Volkswagen, a GM, and a Ford.
Because of all the things I've told you.
Yeah, right.
He's efficient. They're very vertically integrated, and they reuse a lot of the same parts in all of their cars.
Yeah. So I can't wait to see like what their operating margin will be once they reach scale.
Especially with all their factories opening up.
Right.
You know,
what's there? There's Austin, there's the one in California, Berlin, and Shanghai. So they're up to 4.
I think they're wanting to open 2 more. I might be wrong with that. The other thing that's on this slide though, which actually was kind of to my point that I brought up on your last slide, but since it's on this one, I'll just bring it up. Something that was interesting, and I heard it today, and it was something I thought as well, is the day after the Super Bowl.
Oh yeah, up here. Yeah.
So an interesting point was brought up, and I was like, it's 100% right. And it's exactly what I've always thought as well, is you're seeing more and more companies come out with EVs and promote EVs. And that only helps Tesla. And the ironic thing is Tesla doesn't advertise.
Right. They didn't have
They're not having to spend on marketing. And all these other companies are starting to join the space, which is reiterating the fact that this is the way that cars are going, at least in the near future. Now, like I said, maybe there's another source that people switch to in 20, 30 years. But in the next 1 to 2 decades, we're probably are going to be on EVs, electric vehicles, off of either lithium batteries or what other battery they use. And Tesla is 5, 7, 10 years ahead in terms of technology in that space. They have the data, which is the biggest thing in any business nowadays, is who has the data.
Yeah.
And they have all of the users that have been driving their cars for, going 7, 10 years now. probably the closest for autopilot and self-driving. Um, just they've been through it. And the bigger thing is I think they have that name recognition. It's like when you think of EVs, like, and you're convinced that EVs are the way, everyone's buying a Tesla. And like I have a personal thought, which we'll get to on because I'm going to ask you it. And I ironically would go against what I just said personally, but that's because of another reason, not because I wouldn't want a Tesla. But yeah, it's like you think of all these brands, it's people want a Tesla. It's the brand, it's the name recognition, it's Elon. And they make the best cars right now, and they're years ahead of all their competition. And the power grid. Elon has thought every problem through and has created a solution. And it's going to be fascinating to see if they keep this up going forward.
Yeah, for sure. So yeah, I'll just keep going. This is a quick point, just about their expansion into insurance. So I know at first they were kind of just brokering. They weren't actually holding on to. They weren't like the underwriter, but here it says in Colorado, Oregon, and Virginia, they are actually the underwriter and bear the financial risk. And I know what's cool about their insurance is that they have this score as you drive. And if I think your insurance reprices every month, but if you get your safety score up, your insurance will go down. It's really cool.
Incentivizes good driving. It's just like other
Yeah.
insurance companies do it, except they actually literally can track your car.
Yeah. So I have doubts whether they can disrupt companies like Geico and Progressive, but I wouldn't rule out the possibility of that.
I mean, the
As
bigger
much
thing
as it
is,
pains me to say as a Berkshire
I mean,
shareholder.
yeah, oh, definitely.
But
I mean, I think the bigger thing on is that, I mean, obviously disrupt, take market share, but it's the fact of it just, they don't have to be the biggest insurance as long as they're profiting on it. That's added revenue, and
Yeah.
there's no reason why they can't do it with their own cars.
Right. So then Tesla goes into their outlook and they say, over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. So that's just 50% in deliveries. So on top of that, you'll have average selling price will probably go up. Well, actually, maybe it won't if they're expanding into. Okay, so
they've consistently
that's
raised
more of a
it.
question for someone who knows Tesla better than me.
They've consistently raised it over time. I think part of it is part of the supply chain issues, but granted, also I think part of it is, I mean, they just have increased demand. That's another point. Maybe you'll get to it. If not, I'll bring it up on the orders. But yeah, I think it's just part of the supply chain and the fact that they can. Granted, I know Elon's wanting to keep their cars affordable, which is why they came out with like the Model 3. But yeah, it's interesting with their price structure.
Yeah. So yeah, 50% annual growth for a few years of units. You might get price increases on top of that, gross margin expansion. So it's just mind-boggling how quickly this company has grown and how quickly they still are growing. But yeah. And the last point, just more on their share count valuation. They need to get their stock-based comp under control. Like their share count is going up substantially every single quarter. I'm sure they'll get that under control at some point, but they're probably just, what's up?
Sorry, I was going to say, I'm not too familiar with this part. I was going to say, why would they be doing that? What's the benefit for the numbers side?
Well, I think they're trying to attract the best engineers and stuff. So you need to offer them generous compensation plans, but also a lot of this goes to Elon, I believe, like, which I don't understand this about him, because he seems like he doesn't really care about his personal wealth, and he's very frugal. So I don't understand why he has these outrageous like compensation packages, but that's one thing I just don't understand.
The only thing I would say to that, because I would completely agree, the only thing I would say to that is that usually he keeps using his past successes to fund future endeavors. So that might be part of it. Like I said, obviously you want to be rewarded for your successes, and maybe he doesn't spend it, but he just piles into something else.
Yeah, but
So
I mean, you look at
look at all his companies. And obviously that started off PayPal. And then on top of that, like I said, with all the Twitter news and drama with that, it's like, granted, I know that's a very small part of his net worth, but it's like, I mean, it's if it's easier to afford, he can do more of those projects, which, maybe he's passionate about, or maybe he wants, success or sees opportunity. But yeah, that is a good question, because I mean, obviously no one has the answer except Elon.
Yeah. I mean, obviously he's done a lot of good for the world. He deserves to be extraordinarily wealthy,
Yeah.
in my opinion. But anyway, into the valuation. So their diluted enterprise value. So I took their diluted shares times the price, and then I subtracted out 20 billion, which I think is like excess cash, and they own some Bitcoin. So I got to enterprise.
Do they still own Bitcoin?
They own a little bit, yeah.
I was gonna say, because wasn't that a big controversy with like the U.S. government
Yeah,
towards
right
their
here.
tax credits?
Yeah, digital assets.
So they must have just had to sell off.
They sold a little bit of it. As you can see here, they bought, it was weird, it was in the same quarter, they bought 1.5 billion of Bitcoin, and then they sold 272 million, and then they haven't done anything
Well, I was
any
gonna
other
say,
quarters with Bitcoin.
well, I was gonna say, because there was that huge controversy with like the environment, with like the stress on the grid and all that whatnot, and they're like, oh, are you really, preventing emissions? But then you're, hugely invested into a thing that supposedly, isn't. And so I thought they actually got more out of that position, but that's interesting to know.
Yeah, they still own some. It's weird what they're doing there. But anyway, yeah, their enterprise value is about 1.2 trillion. So I think their gross profit will come in around 25 billion this year. It might actually be higher, but I took this number times 4, and then I added a few billion to it because they're going to keep growing quarter over quarter. But that's still, the EV to gross profit is 47x. Although most of a big chunk of their expenses below gross profit are in R&D, which you could view more as an investment than an expense in large part. And then obviously they spend 0 on advertising, like you mentioned. It's interesting their SG&A went down so much quarter over quarter. But anyway, 47 times gross profit still seems steep to me, although if they keep firing on all cylinders like this, and again, they're growing 50%, they're growing the top line 50% year over year for a few more years. It isn't as crazy as I've thought in the past. So
yeah, because I mean, if they can cut that in half, that's what a lot of like normal big companies that are trading at. Whether it's right
I mean,
or not,
a company of this, this high quality will trade higher.
Yeah.
I mean, so.
Yeah, I mean, like I said, yeah, big tech companies, people are more willing because they feel it's a lot safer, and they see the innovation and the room for scale still, at least in most big tech companies. One I know is under a little fire right now, which I'm still a believer in. But
what, Facebook?
Yeah, Meta, you mean?
Yeah, right. That can be a topic, another episode.
Oh yeah, I'm sure. Yeah, we'll definitely get into that one.
But my last point on this, I will not be buying the stock anytime soon. I can't get myself to pay this type of multiple just in my conservative ways, but
still a doubter.
I guess, yeah, I guess I don't like making money, but I think there are easier bets to make out there.
Yeah, I would agree.
This company in the middle of 2019 is unbelievable how cheap it was, and I just didn't realize it.
Yep.
But
not only that too, I mean, the bigger thing to me with the company is just, it's crazy how well it is held up in this market, because everything has been getting killed. And you would think with, like I said, how forward they're trading, that it would have come back a little bit, even with great earnings.
Right. Yeah, it's up there near all-time highs.
Well, I mean, the stock was down at the beginning of the day before earnings, and then it shot up pretty much back to where it was, plus up a little bit more, I think, in after hours. I haven't seen it recently, but I saw it was like down 5 and then basically back up 5 after. And obviously I've just been seeing people just really praising Tesla, as you are now, which is not common.
Well, I never hated the company. I never hated.
Oh yeah. But I'm saying that you're starting to see numbers, at least, like I said, that make, a better case. It's not there yet, obviously, still, but as you
Yeah.
said, if they keep it up,
I mean, major props to the people who realized this stuff a few years ago, and they've made a lot of money, and they deserve it because they put in the work and they were right.
well, the bigger thing with it too is anyone that was an early investor, props to them because the media was shredding this company.
Mhm.
Any bad news, it's like, oh, this company's going bankrupt. I mean, granted, they almost did too.
Yeah.
But yeah, it would just seem like I remember in 2019 or 2018, it's like just controversy of like, oh, the battery explodes, it catches on fire, someone died because of like the self-driving. It's like any
Elon,
opportunity,
yeah, and then you have stuff about Elon smoking weed on
Yeah.
Joe Rogan, and
it's like any opportunity to bash Elon or Tesla, like the media did it. And
well, a lot of people still do, and I'm like,
you know,
you guys are insane. Like, look at what he's doing.
yeah.
I don't know what you have against him, but
Because I mean, outside of Tesla, and obviously, like I said, Tesla's still it's doing fantastic. Um, Outside of Tesla, it's like, yeah, it's like obviously other stuff is private, but company wise, but yeah, everything else he's doing, it's crazy. Tesla just happens to be the one that's publicly traded that people have made a lot of money on.
yeah, I'm blown away by him. I need to go out and buy his biography. But yeah.
But
Do
yeah,
you have
what
any
else?
more thoughts on their quarter? Or...
Yeah, so the thing I was going to get into, the Super Bowl ads and how that benefited Tesla without Tesla doing anything, I think is just hilarious. Yeah, there's two other points. There's one question I had, or actually I'll parlay that into two. But the one thing I was going to say also, the other thing that Tesla has going for, which I mentioned to you, it's they have pre-orders like still months in advance.
Right.
So they have guaranteed revenue coming in still, which is crazy.
And don't you put deposits down on those too?
Well, like I said, there's people that have already ordered though then too. And I'm sure some of that doesn't go through until it's actually delivered. And maybe I'm wrong with that. I might be wrong. I haven't bought a Tesla, so I don't know when you actually officially get
What do you
charged.
mean? You own one.
I own a very small vintage Tesla. That was a birthday gift from the man across the screen and others. But I might have to make an appearance on that. But anyways, but yeah, so just the fact that, like I said, they're so vertically integrated because like any problem you can think with EVs, like the power grid, and they have the charge stations, they have their fast charge stations, and the charge network is everywhere, and they keep expanding it. And they're welcoming other companies to use their charge stations, which is crazy. And they originally incentivized it that it's free, which is a promise one of many Elon has gone back on, of where it does cost you. It's still cheaper, especially now, than going to the gas pump. But that, and then obviously he's becoming one of the world's largest battery producer, which then he'll be able to sell to other EV companies theoretically, because he'll hopefully have the best prices. And then it's the fact if he's able to then put those in his own vehicles. It's just, the man's doing everything that you can think of. And then on top of, like I said, which I'm not necessarily a huge fan of, because I do miss cars being more unique. And it is one of my problems with Tesla. I think their cars are good looking cars. They're not fully my taste, all of them. I wish there was more of a traditional look, which I know obviously isn't what they're going for. But the fact that they use all the same parts is like, it's ingenious, because they can just mass produce one product and they just use it in everything, versus other car companies, everything is very specific to that model. And part of that then too is for when stuff breaks, like I said, you can charge more.
Yeah, what's Tesla up to? 4 models versus like 4 GM have how many?
Well, and then that's the other thing is, which like I said, is it's very cost efficient and it's very good for obviously, profit. I wish they would have more options eventually. Like they have multiple variations, obviously, of each car. But yeah, they have 4 with theoretically 6 in their lineup, and then 7 if you count semi trucks. But yeah, because they've got the Model X, they've got the Model Y, which is the cheaper hatchback compared to the Model X, and then you've got the Model S, which is the premium, which I think is the best looking car. And then you've got the Model 3, which is originally came out as the budget car, which is still extremely nice. I have friends and they love it. I think that originally came out like around 35,000. I think it's higher now. Maybe it's still there. But yeah, it's like it was in a very affordable car, which is what they were going for. But yeah, it's like they're ingenious with what they're doing, because Elon knows he needs to keep, one, obviously he's trying to be as profitable as possible, but two is he's trying to get as many out there as possible before competition enters the market. Because the more people you get in Teslas, then that brand loyalty, you realize, oh, this is an amazing car and so on.
Yeah.
But yeah, so he's ingenious with his whole system. But yeah, I was gonna say, what are your thoughts on that? I mean, maybe you don't have a ton, but obviously you brought up the fact that, yeah, they only have 4, and obviously they have the Cybertruck eventually coming, and same with the Tesla Roadster. And the Tesla Roadster, they had people pay in full on the pre-order. So I don't know,
I mean,
it was
that's
250
just
$250,000. I think it was there, or maybe around that, a little more, a little less. But yeah, you had to put $250,000 down just to get a pre-order, and that car was promised like 3 years ago.
so basically those people gave Tesla
A loan.
an interest-free loan.
Yep. Another
years.
ingenious thing also, because people are willing to do it. Until people aren't, it's like,
Yeah, I just it's frustrating that I was so blind to this for so long. But I don't know, it kind of feels good to like wake up and be like, man, I was wrong. I have a lot to learn.
you're never going to be right on everything.
Yeah.
And
At
like I
least
said,
I wasn't shorting it.
yeah.
I didn't lose money.
Well, I was gonna say, on the other end too, it's not like you said, you believe it's a great company, you just wouldn't invest currently on it.
Yeah.
So then my other question would be is, if you were to buy an EV right now, what would you buy?
A Tesla. I mean, I don't know.
And see, that's the problem right now with other manufacturers have.
Like, I know there are others, but they don't have like, I don't know if Rivians are any good. I don't know if Lucid, like, are they even on the road yet?
And you're not even referring to your
Well,
traditional
Ford,
car
GM,
companies.
yeah, I know. My uncle drives a what is it? Chevy something, and I think he loves it.
Yeah, there's a lot of others, but the problem is like the more affordable ones, or like just you don't know what models they are unless you're really integrated. But everyone knows Tesla. It's crazy. But the reason why I asked that question is one, I wanted to see, as a person, like I said, who's not, from the outside in on the EV market. It's like, yeah, I would buy a Tesla. That's what your response was, and that's what I think most people was. And like I said, going to the Super Bowl, that's what the response was. For me personally, if I could have any EV, it would be the Hummer EV.
You're right. Well,
but
you have some history with Hummers.
Yeah, exactly. And well, it's a sick car. I gotta sit in one. I gotta see it drive. It's just awesome. I would want the closed back. I don't want the truck, but so that one comes out next year. But I also don't have $120,000 laying around, so that's out of my price range. Next would be the Model X. That's my favorite Tesla. Again, $100,000, $80,000 car.
Is that the one where the doors go up?
Yeah.
Okay.
I like the size. I like driving a bigger car. I think it's more comfortable. It's safer. I do like the Model 3 a lot. Or sorry, Model S. I don't think I would buy a Model 3. I like the Model S a lot. However, if I was going down to that, and I'm also trying to look at price, which would be the bigger thing, I would actually get the Mustang Mach-E. So it's like, as big as I am on Tesla, I actually would buy a Ford, which I think is why Ford has also done so well. And it's very controversial that they went with Mustang as the branding, but I think it helped. I honestly personally wish they almost might have gone with the Bronco branding on it. I think it would have been more fitting, but they didn't know if Bronco was going to take off, as obviously Broncos are coming out, but they would have been able to launch simultaneously. But yeah, because I saw the Mach-E at Barrett-Jackson like 2 years ago, and I thought it was interesting. But I just like it because it's a slightly larger car. It's a crossover. It's not an SUV. It's not, it's not an SUV, and it's not a. Why am I blanking on a
sedan?
Yeah, thank you. It's not a sedan, and it's not a full size SUV. So it's like it's got a little more room. And I think it looks decent. I would prefer a slightly different design, but I think it's a cool looking car. But yeah, it's just interesting. But that's also why I think Ford, they passed Tesla 1 month in global sales in the EV market, and they're the only one that's come obviously even close to touching Tesla. But I don't know if they've had multiple. I just know it was big news when they did that for the first time. But yeah, it'll be interesting. But yeah, that's about all I've got on that. I just wanted to touch on that because I thought that was just kind of an interesting point, and I wanted to hear your viewpoint on which car.
Yeah, I'm just not a big car guy, so
Yeah,
I don't have
yeah,
much to
that's
add
true.
there.
I was gonna say you're
I
very functional.
drive a Civic.
Yeah. Smart man though. Smart man.
Yeah. Um, the other big earnings report this week was Netflix. Do you want to get into that, or do you have some more thoughts on Tesla?
Who could have saw this coming? How about everybody? I mean, one of my friends here in town, like I remember he came up to me like 2 months ago. He was just like, isn't and the funny thing is he invests too, but he was like, he's like, he's like, is Netflix public? Because if so, I want to short that stock. Because he's like, what, like, just there's so much competition coming out,
Mhm.
and it's just, I have a Netflix. I love Netflix. There's shows that have come out on Netflix that normally I would watch, and I'm not watching them. And that's
Yeah.
not the biggest issue for for Netflix right now. I keep wanting to say Tesla. That's not the biggest issue for Netflix right now. It's like they keep raising the price, and the quality hasn't gotten that much better. But obviously, they're having to raise the price because I think we had this discussion like a year ago. But if you looked at how much each streaming company invested into making content, Netflix was like 80% higher than like the next closest competitor.
Yeah, let me pull it up. But I think it was 17 billion in 2021.
Disney might be getting closer now because obviously they're coming out with a lot more shows and they're trying to have one pretty much for every week. Obviously, going across Marvel and Star Wars is what they've been focusing on.
Mhm.
So their production might have ramped up, but Netflix was really investing heavily, which is smart because like they have this big, leap in users over everyone because they've been around longer. And honestly, I still think they have the best interface. I love Netflix.
Right.
I love their app on the TV, on the phone, on my tablet. I love it. I like the notifications better, but it's so funny to me because did you see what the response was? Obviously, we didn't even say it. Stock plummeted today. They
Yeah,
announced what they have
35%.
200,000 users they are projecting. They lost.
Well, they lost 200,000 in Q1. They project they're going to lose 2 million in Q2.
Yeah. It's just crazy.
But yeah, they spent 17.7 billion in 2021 on content.
Yeah, and obviously eventually you're going to have to make it up, so that's what raising the prices. The problem is there's too much competition now of where if there's nothing you want to watch, you just cancel it. It's the one benefit. It's interesting going from cable to cutting the cord is obviously at first it was like, oh, this is great, it's cheaper. Now it's not so cheap, especially if you're paying for everything. The only difference is you're not locked into a contract. You can cancel any time. You can password share, which is what was brought up today, that they're cracking down on, which, yes, in theory, that's smart. But also, if your price is so high and you're going to try to crack down on it, people that were splitting it, at least you're getting an account. Now, both might just cancel. And so at their current price, I think cracking down on that is actually worse. It's going to be interesting. They're in a really tough situation.
So that was one part of it, and the other part was they're thinking about launching a ad-supported version.
Well, they have to. They're not doing that because they want to. They have to because Hulu does it, and that's the one thing I do love about Hulu. I don't watch Hulu a ton, but it's only like I think $7 is what I pay, and it's like what Netflix is double that right now, if not more. But they're at $16. I think they're at now, like $16.25 maybe.
I'm not sure.
They keep increasing it by like a quarter or 50 cents. But it's over $15, which is double Hulu's lowest plan. And I think even Hulu without ads is only like $12. Maybe it's 15. But yeah, Hulu has price structures. So if you don't want to pay the full amount, yeah, you just pay for ads, and I'm sure they do very well with that. But yeah, Netflix, obviously they just had they were stuck in their ways, as they should have been, because it was working. But yeah, it's just they're in kind of desperation mode right now. Because I mean, what would you? I mean, I know my answer, and I think it's probably the same as yours. If you're watching content streaming wise, what are you watching it on?
Well, that kind of changes like once I get through stuff. Right now it's HBO Max, but
and that's what I think most people are switching to, especially. And it's going to be interesting. I don't know if we brought it up on the last podcast. I know you and I had talked about it, but with Discovery purchasing them after the split from AT&T, it's going to be interesting to see if their price increases. But but everything Discovery is going to offer, I don't care about. There's not a single network, or none of their networks is anything I watch. So I'm really hoping it's just kind of an add-on and just a premium service, or you can pick and choose. Because I really like HBO Max where it's at right now for the price and the shows they have on there, the movies. I'm a DC fanboy, so all the DC films and Batman, everything, I love it. And it's worth the money to me because there's actually new stuff coming out, and it's a lot more relevant stuff too. Netflix has been very kind of just behind. And also I think part of it is like what, because they lost The Office, didn't they?
They did. Yeah, to
Where did-
Peacock.
Peacock. Yeah, and that's the
Who
problem
uses
is-
Peacock? Who
but
has-
that's my point. Who uses Peacock? But because they're a platform and they need something to draw, they're willing to pay more than what they probably should for a show like The Office, which then prices out Netflix because they're like, oh, this doesn't make sense. And because there's so much competition now, they're taking away those types of shows away from Netflix. So it's like Netflix is probably making the right business choices with letting some of those shows go. The problem is you're essentially giving away users to competition and allowing that to happen by releasing those shows. So it's just
Right.
like they're in a very, very interesting situation.
Yeah. From a financial perspective, I've always found Netflix is impossible to value because, like I mentioned, last year they spent almost 18 billion on content, but what they do is they add that content to assets rather than, it's not an expense, and then they expense it over a period of like 3 to 4 years. So basically, like their expense last year for content was 11 billion, but they spent 18 billion of cash. And obviously you can say if they're in a hyper growth phase, well, obviously they're going to spend more because they're investing for growth. But now that we're seeing subscriber count go down, you really have to pay attention to that cash, like their actual cash flow, because it's you can't say it's for growth anymore. It's like an operating expense, and if that's the case, then they're way less profitable than it appears.
Yeah.
And yeah, just their net income figure is totally reliant on how you estimate their amortization of content assets. I don't want to get too much into accounting, but like I've just always found it's impossible to value that company, and that's why I've avoided it.
Yeah. And so what basically to dumb down from what I was understanding from that, or the toughest part of that you're not getting into is basically like the content they produce. You don't know how to value it, correct?
Well, yeah.
Like being part of it. Because like I said, if they're spending, you know, what would you say, 17, 18 billion on content?
Yeah. Well, that's how much is spent in
theoretically, because theoretically they own the rights to that. So say Netflix went under, they still own the rights. They could then sell or rent that out, you know, the right, or sell the rights out to a Disney Plus or a Peacock or an HBO, and then obviously profit off of that. Yeah.
But like you don't know, like they have that. Yeah, you don't know if they could sell it for what the cost.
Exactly.
It might be below that. It could be above. I don't know.
Well, not only that, the other issue too, which I keep seeing on Twitter and just a lot, and I think I've only had this with maybe one show, and I can't remember what it was, but they keep making shows and they cancel them after one season. And it's just like, you're not even giving it a chance. Some shows aren't going to catch on.
Yeah.
It's just like,
yeah, it's a tough business. Obviously it's kind of easy to say that now with the stock being pummeled, but I genuinely would have said that a few weeks ago, the same exact stuff.
I mean, obviously I'm not just saying, it's like, you've been saying that for a long time now, because I've asked you about that. But yeah, my big worry is, it's like, yeah, Netflix is the biggest fish in the pond, but the problem is that's going to be a hard one to stay ahead of. Especially the other thing to think of too, it's like, this is after COVID also. And granted, like I said, you've seen, I think, the major impact from that, but everyone was stuck at home. So you're going to see those big numbers. And obviously we are 2 years away from the lockdown, but you know, with prices going up, and yeah, maybe people have not watched everything, but you know, getting bored with it and with other options, it's like, yeah, maybe you signed up for it during quarantine and just, you know, now you're finally getting around to it. And a lot of people already have, but it's just, I think that's the other thing, is they got as many users as they were ever going to get during quarantine. It was just like Peloton. Like, it was the perfect storm for people are going to watch content and people can't go to gyms. People are going to pay for subscriptions to streaming services to watch as much as they can because there's nothing else to do. And if you want physical activity, you have to buy a bike. And now that gyms are opened up, people are ditching the Peloton. And now that there's more competition and people aren't stuck in the house and maybe watching TV all the time, they're cutting Netflix. Plus, they keep, like I said, they keep raising the price. It's not, the value is not there for a lot of the stuff that they have on there.
Yeah.
And the other problem with the streaming too, which I was getting into with the price and I kind of went off of it, you can cancel anytime. Because I've always said this, as a young adult, as if a show comes out, theoretically you should pay for it that month, watch everything, cancel it. And then when something else comes up, you know what I mean? Because you can do that. There's no penalty.
Yeah.
So you don't need 3, 4, 5 subscriptions. It's like you just need the one that you're actually currently watching, and then not be lazy and go cancel it. And then just you already have your account, just renew the payment whenever something comes out again.
Yeah, it's a tough business.
Yeah.
My last point on Netflix is Pershing Square, which is Bill Ackman's hedge fund. They bought a big stake 3 months ago and they sold it all today. And I think their loss was like 400 million. Just interesting that they flipped so quickly on that one. And I think they said they think it'll probably still do well over time, but the dispersion of potential outcomes in the future is so wide now that they don't feel comfortable making forecasts. And they think there are better opportunities elsewhere. But
it's a big loss still to take.
Yeah.
All right. Well, let's see. I'll end it on 2 questions. One, what do you, we're gonna start a segment here that we can refer back to. Put you on the spot. What's Tesla at the end of the year?
Oh,
December 31st. What is the stock trading at?
I can't predict that.
I
don't even have a guess.
You're gonna have to give a number.
I think it'll be around its current price.
I'm gonna say it's at 11.50, but I think they'll do a stock split before then.
Okay.
Which I think will also help drive it up. Because they've been rooming it for forever. And I think Elon originally said it had to reach like 1,300, which it got close to. But now I think he would do it sooner and lower. Okay, so we got that. And then the second thing would be, if you were Netflix right now, what would you do to solve their current issue? What do you think? If you were working for the company or head of the company, what would be your plan of attack given what we know? And like I said, because obviously we're users. So we have our own perspective on it as well, not just obviously from being internal, because we know nothing about how they operate. But if you were put in those shoes, what would you do?
I'd do exactly what they're doing. I think they're being very smart with cracking out on the account sharing and then launching ad supported. I think those are the 2 obvious things to do.
See, I would not crack down on the password sharing. I would not, because like I said, I think there's too much competition. If you have those accounts and you're losing this many, I think you need to prioritize keeping them. Once things are going well, then I would crack down on price sharing or on password sharing. Because then people are going to buy it regardless if you're seeing numbers go up, because your demand's going down. Last thing you want to do is crack down on it and have more people get unhappy.
That's a good point.
Yeah. Well, like I said, look at our streaming for our household TV.
Right.
I mean, I probably wouldn't be paying full price for it if we weren't splitting it. So
true.
But yeah, so I think that's a big way to think about it. Especially for people that are using it too. Like I said, I think probably majority of people canceling are not the older adults. I think it's probably, people who are probably a little tight on cash, or, more of the millennial Gen Z. But yeah, I think adding ads is exactly what they do. And if I were them, I would be very aggressive with that price. I would really try to cut, like, either match Hulu or go slightly cheaper, which I know they probably don't want to do, but you have to get the most appealing offer again. Like you need to be the cheapest, because they would be the cheapest best option, because they might not have the best content, but they're the cheapest. And then out of the cheapest, they are the best, because they're not a Peacock or an Amazon, and granted, Amazon's technically free if you have Prime, but
seems like Apple is taking some share too. Of course, Apple they don't ever lose.
Apple, what a great company. Although didn't they go down a little bit today?
Did they? I don't know. but
I don't think they grew as much as they were supposed to.
they haven't reported yet.
Okay, sorry. Then
Yeah.
I think people are projecting that. Then that's what I heard.
Okay.
It'll be interesting. Obviously, we'll see when it comes
Yeah,
out.
we'll talk about that one, of
Yeah.
course.
I think the last thing, which we did not address at the beginning, granted, no one's probably watching at the end of this part. Hopefully you are, but nice hat.
Thank you. Yeah, I'll be going to the meeting next weekend. Super excited.
Yeah.
And nice hat to you. Sorry
Thank
about
you.
the loss.
Same.
I
to
mean,
you.
I'm a fan too.
Yeah, I was
so.
gonna say that's a diss on yourself too. But yeah, no, it'll be interesting to hear some of your experiences from the Berkshire meeting. But I was more referring to the fact that we're both wearing hats because bad hair days.
Awful hair day. Yeah. All right.
Barbershop soon.
Yeah. Same.
Anyways, any closing remarks?
I got nothing.
Same here. If you've watched this far, thank you for tuning in. Please comment, please like, please subscribe. We enjoy doing this. We're going to continue to put out content, and we appreciate any support. Until next week.